On to multifamily. According to Axios, America's apartment boom is ending. It's ending. Now, they're not talking about multifamily investing. They're not talking about people living in apartments. What they're talking about specifically is multifamily construction. We've talked about this a lot on the Gray Report of how supply levels are receding, permits are receding, but are they receding enough to move the needle and to give owners and operators a little bit of breathing room? Because the reality is there's a lot more competition on the market than there used to be. More than 500,000 new apartments are expected to be completed this year in 2025, down roughly 21% from last year's record. However, that's still above the annual average this decade. So while the reduction is relatively significant, there's still a lot of apartments coming online. And we still actually need a lot of apartments to be built. Depending on who you ask, we still have a deficit between 4 and 7 million housing units in the United States. And any slowdown in that construction activity will further the issue of housing unaffordability. With interest rates as high as they are, we all know that it's hard for individuals to go buy a single family home. They're having to rent because buying isn't an option. And rents, while they've been kind of flat for the last few years, they're much higher than they were 5 or 6 years ago. The perception that rents are high. And again, even if they haven't grown a lot over the last few years, many individuals in many markets are exceeding that kind of 30% threshold of rent to income that is considered rent burden, according to most people. And the consensus is, the rent seems really expensive and we need rents to come down. We've learned, the pandemic confirmed something that we've always known, and it's as simple as supply and demand, is that when we build more apartments, if we add more supply, prices will come down. And not just prices of luxury apartments, which are often the type of apartment that's being delivered, but prices of B-class apartments, C-class apartments will come down if there is a significant amount of new supply of any type of apartment. So building is the answer. Unfortunately, debt equity has been harder to come by. The capital to build new apartments just isn't there. And again, this uncertainty is not exactly leading to more and more deliveries. So we need to continue to build more, but we're not building enough. We're still building some, but we're not building enough. According to the Harvard's Joint Center for Housing Studies, wrote in a June report, the multifamily construction boom is ending. So while that is potentially good news for apartment owners, it's not necessarily good for apartment renters. A lot of talk of a potential national emergency related to housing from the White House. Scott Bessent, Treasury Secretary, has talked about this multiple times. It'll be interesting to see what solutions they end up proposing. Deregulation has been kind of the tune that everyone has been singing, but how will that be achieved? Can we get to some sort of kind of more universal, zoning standards? Can states step in to say we're going to have one set of standards for each county? Not if you go cross one county line, you have a completely new sets of zoning and restrictions. Can we make it a more straightforward process? I think that would certainly help. Certainly being less restrictive. In markets like New York, there's all kinds of restrictions on building new housing and also how to deal with tenants once they're there. If you can't evict someone who has been squatting at your apartment for 6 months, it's hard to make further investments into that market. And so by easing up on some of these restrictions may lead to more housing. The other piece, another carrot rather than the stick, is this idea of middle-income housing tax credits. We're already doing it for low-income housing tax credits, and if the solution is just we need more housing, you could just issue more tax credits. That you could argue that maybe there's some lost tax revenue. There's always, again, there's two-sided risks. There's always risks regardless of the path. But if you really wanted to lower rents, you wanted to build more housing, you just increase the amount of tax credits. Low-income housing tax credits, create this middle-income housing tax credits. Again, I am not a big fan of government involving themselves in industries and putting the weight on the scale. But if I was dictator of the United States and we wanted to solve the housing crisis, you'd issue you would triple or quadruple the amount of LIHTC credits, and you would create the MITEC, middle income housing tax credit, and you would add another 500,000 to 1,000,000 housing units. You could do it in 3 years. Now, this would be not good news to developers. It would be not good news to owners. Rent would be flat. They might be negative. That's what Austin has been experiencing because they did deregulate. It would be good for builders because they would be earning some sweet development fees. Again, the current system is not just we're giving affordable housing, it's welfare for the wealthy. Developers are making nice development fee checks when they build these buildings. And they need to be. They need to be incentivized. Otherwise, why would you build it? They're not doing it for charity, and they never will. But let's not kid ourselves that it has to come out of both ends. The folks that really need it and the folks that we need to do it. So developers, it'd be a big boon for developers. We'd be able to build enough housing that we would need. And some would be, LIHTC income restricted. Some would just be market rate. Maybe it would still be somewhat income restricted, but I think middle income. They've talked about anywhere between like 80 and like 120% of area median income. If you know more about the middle income housing tax credit, comment down below. But I think the solutions are out there. We just have to have the will to pursue them. Further on housing, U.S. single-family housing starts near 2.5-year low as inventory bloat weighs. We're starting to see, again, not like any major price declines in the single-family housing market, although we are seeing some declines in some markets. But generally, as a nation, it's relatively stagnant, relatively flat with, again, some declines in some key markets. But the fact that we're seeing a 2.5-year low in inventory or housing starts is a good sign for that, again, for at least the home builders trying to move product, but it's not surprising. Costs of owning a single family home are up significantly compared to the last few years. Multiples higher if you talk about the cost for mortgage, insurance. More people are forced to rent. I think it's fascinating that the single-family home market has been as robust as it has been. The fact that it has been able to post gains in some years and is at least flat. The fact that you can increase interest rates to this degree and still have a functioning single-family housing market, I think goes to show the robust nature of the U.S. housing market and the U.S. economy. And again, putting my optimist hat on all of this, the fact that we can get through tariffs without a recession, again, depending on how you look at the numbers, we can get through tariffs. We can get through raising interest rates from March of 2022 to 24. We can increase interest rates over 500 basis points and technically not cause a recession, which maybe we kind of did back in first quarter of 2023, but it never technically qualified. But the fact that we haven't been in a tailspin, I think, shows that the United States economy is robust fundamentally, is incredibly strong. It's not perfect. There's a lot of things that aren't good. But travel somewhere else outside the United States, talk to them about their economy. It makes you really appreciate what we have here in the United States. Again, not perfect. A lot of things to fix. A lot of things in society aren't great. But it could be a lot worse. And it's a privilege to live here. It'll be fascinating as interest rates come down to see more construction. And that is my base case. I think we're going to see a slowdown in deliveries as indicated by starts and permits. But there is enough capital out there that wants to continue to invest in housing because it is in demand. Even with higher interest rates, demand has been peaking. On the multifamily side, it's at a decade high. Even if rent growth is relatively stagnant, the economy is surprisingly resilient. And if we could rid ourselves of some of this uncertainty, we could be in a really good spot. Now, do we need to have a pullback before we get there? Perhaps. Again, I think a lot of the AI productivity is real, but it's also real hype. And I think it's the timing can vastly offset the outcomes. I think the productivity boom from AI could potentially save us from a potential sovereign debt spiral. We got way too much debt in this country, but productivity could significantly alleviate that and allow us to maybe even grow out of it. It's an incredible tool, but it might not happen this year, might not happen next year. And if there's any article, if there's any change in the narrative of the timeline or the effectiveness, or if the productivity enhancement isn't really there, we could see a correction very similar to the dot-com bubble. Yep, the internet's going to be a thing. It is a thing. But maybe we haven't figured out the timeline or all who the real players are just yet. But over the long term, again, I'm pretty optimistic.